Good evening all, and welcome to this month's Ask the Trader, your chance to ask me any questions you want around the world of trading or learning, education, anything you want, as long as it's all above board. So let's crack on with tonight's session, and first up, let's go into a market overview. So let's start with some indices. I hope you can all see that now. This is my sort of very scruffy map of the world's major indices and what they're up to at the moment. And as you can see, they're up on the top. We have the Nasdaq 100 leading the way, strongest index out there at the moment, up 16%. But what's more surprising is the second place stock market. That is the Russian stock market, up 13%. So despite all those sort of restrictions and embargoes placed upon them, they're still doing very well. And then we have the Irish one down just over 7.5% up. And you can see the S&P sort of smack bang in the middle, up 3%. And in terms of bad performers, we've got Poland, Brazil, countries like that. There. Now, in terms of the major indices I look at, what have we got? Starting in the top left, ASX 200, Australian, just starting to bottom out and maybe start to warm up again to the upside. Then to the right of that, we have the Nifty 50, that's the Indian stock market, trying to hold the 16,900, 17,000 line, possibly looking to break down further. Interesting times in that stock market. The FTSE 100, after such a good start to the year, it's pulled all the way back, but showing some support around 7,500. Strongest stock market in Europe probably at the moment, the German DAX 40 there, top right, you can see pushing on upwards. It's been a good 23 for it so far. And then into the bottom left, S&P 500, bounced off that trend line, starting to feel a bit more positive again, but to the right of it, it's smaller tech-based brother, the Nasdaq 100, much stronger performers. We've just seen the strongest market out there at the moment. The Nikkei 225, trading in this sideways range, it has been for a long while. 29,000 down to 25,500, been bouncing around. Let's see where it heads next, but looking a bit more bullish in the short term. And the Chinese A50 index there, bottom right, after a week, sort of February, March, looks like momentum slowing down on the bears, possibly consolidating for a push on upwards. Then we have some stock sectors in the US that I like and dislike. And we're going to start with the ones I dislike at the moment. Top left, that's the cannabis sector. That's the Global X Cannabis ETF, and you can see it's been down for a few years now and not looking pretty at all. And then to the right of that, the next one I dislike at the moment, if you want to go short it, it's the Bitwise Crypto Industry Innovators ETF, and you can see again they've really been down for a year and a half almost, maybe bottomed, but still looking weak. And two that I like, we've got bottom left, technology sector, you can see really pushing on up, bouncing off that longer term moving average. And to the right of that, if we sort of drilled down into the tech sector more specifically, got semiconductors there, companies like Nvidia, AMD, those sort of companies, and again similar shape, pushing on upwards. And just a bit of a reflection on the banking crisis, some non-US banks, see what they were up to over that period. And you can see in the top left, HSBC down 21%, one of the biggest banks in the world, to the lowest point, and now starting to consolidate. Metro Bank, a UK smaller player, down nearly 40% and still tumbling. I won't touch Credit Suisse just yet. You see Barclays, another big UK one, again down 30% and bottomed, and putting in maybe a bit of support there. Deutsche Bank had troubles over the weekend, down 33%, again looking like it's bottoming. And the big French one, BNP Paribas, again down about 30% and again bottoming. Credit Suisse though, it's down 95% over the last 2.5 years. Hasn't been a it's not just a new problem. This with Credit Suisse, it's been a long-term problem. And as you can see there, top right, it's still in a lot of bother despite UBS getting involved. And then a stock that continues to amaze me, Meta, one maybe to watch. It's been up 131% since October of last year, and it's a company that hasn't been performing well, been making a lot of its staff redundant, getting beaten by the competition, not particularly liked either, but they're still putting in the performance. Everything's looking bullish at the moment. We've got this strong trend line around the $200-ish area. If we can break there, then the late 200s isn't out of the question. And moving into some currencies, what's strong at the moment? Well, it's sort of a mixed bag. The Japanese yen and Swiss franc, start of this banking crisis, their safe haven currencies were looking strong to start with, but they've given back some of that strength, especially the Japanese yen. The US dollar's pretty flat where it is at the moment. Australian dollar probably the weakest, trending on down, and you can see the pound, this darker red line, has been moving up over the month. So hard to put currency pairs together on that combination at the moment, so maybe some shorter term swing trading is the order of the day. And then into some commodities. WTI crude oil bottomed out around $65, just the last week or so starting to improve the situation. Same for RBOB gasoline. Both are strong seasonal plays this time of the year. Same with nat gas, actually should be bullish this time of year, but hasn't been much weather, adverse weather to spike those prices, and it's continuing to drift down. And finally, I suppose one of the big talked markets at the moment is gold, and it's had a good 23, but it's just struggling to break through and that 2000 and get up to that next target area, which I've honed in at around about 2080, 2100. So that's a brief overlook of what's going on in the market, some of the stuff that I'm looking at. So let's now have a look at some announcements. Next session will be 26th of April, Ask the Trader, same time, same place. Copy trading, it's going to be live April, that is 100% for sure, and there'll be a video out early next week on the YouTube channel on how to sign up. All the details that you're going to need, it's all going to be in there. And some of you might have also noticed that the Paid Traders Club on YouTube, I've now moved that to a free club just to attract more people in, to get the community building up. And if you want to get more involved, then there's the free Telegram group to join into as well, and you can find links to that in most of the underneath the descriptions in a lot of the videos that I do. So that's the announcements out the way. Let's get into those pre-sent questions. And firstly, 3 from Daryl. Firstly, what is the difference between the index and an ETF? Good question. Index is like the stock market, like the FTSE 100, or from South Africa, the SA40, the Nasdaq 100. They're on an exchange. And what an ETF is, it's a combination, a basket of, it started off being a basket of stocks, but it can be other markets as well, put together to replicate maybe a certain sector or industry. Something like I've just shown you there on those charts where we looked at the semiconductors area. And what's with these ETFs is that they're then basketed up, and then like a share stock, they are floated on the stock market, so you can actually trade the price, and often they have options on them as well. So they're actually a good way of getting into sectors rather than the individual stocks or a specific point of view. You might be, like we saw again, you want to go short cryptocurrency or short cannabis, then there's an ETF out there. There's thousands of these ETFs covering all sorts of ideas and markets, and have a look on the exchanges, the stock exchanges, to find and play them. Whereas the index, and this is what I'm guessing you're relating to, is the overall stock market index. You know, like we said, the FTSE 100, the S&P 500, that sort of thing. So then that leads on to your next question. Is it better to trade individual stocks or just trade an ETF? It depends. Do both of them if you want. So I definitely look at these sectors and ETFs, and I try and find sometimes the strong, you know, if I'm bullish, try and find the strong stocks within the ETF, or if I don't want to take the risk and just want to play that idea, maybe it's electric vehicles, I don't want to buy Tesla, I want to, you know, get exposure to the whole lot, then, you know, there's no problem just, you know, buying that ETF. So there's no right answer to that question. It's really down to you. An individual stock maybe has more individual risk associated to it, and the ETF maybe, you know, more, you know, it's the sector risk play. But yeah, there's no right answer to that. Then your third question, Blueberry update. Just mentioned that's the copy trading coming next week. Look out for the video. Then a question from Crypto A to Z. Besides chart analysis, do you use any other data or websites to make decisions on your trades, whether traditional markets or cryptocurrencies, for example, CME site or MarketWatch? Yeah, I do use a lot of extra resource out there. In stocks, for example, I use Benzinger to get a lot of the information for me. I did a video recently on that if you want to find out about there, and I think I've even got a special offer of a discount on the subscription there, 25%. I think is still available there if you find that video and click on the link. Check it out because they've got a free trial period as well, but you know, a lot of stock information on there. But I use other sources of information, for example CFTC for COT data, that's commitment of traders data. Cryptocurrencies, there's lots of stuff out there, lots of great free resource. I'm just trying to think of a few off the top of my head. Crypto bubbles, just to see where the market's going. I've got lots of different apps as well on the phone. The good thing with the crypto world is there's a lot of free information out there. But you know, back to the traditional markets, investing.com, like you mentioned there, MarketWatch, they're all good sources of information, but it's what you do with them that counts. And I try, I'll use specific information and try and make it as systematized as possible. You know, in the oil area, I'm using volatility indices, which comes from a separate source. Things like rig counts, all sorts of different information, but I try not to get clouded by the human element of these resources that try and spin a story in their favour. So you always got to be careful when you're using free resource and how clean it is. So I like to keep my trading, as many as you know, as clean as possible. So just bear that in mind when you're looking out for those type of resources. I think I've got some videos out there, maybe even on my TikTok or Instagram channels, of some of the free resources I've used, or in some of the other videos when I've touched on certain markets like cryptocurrency or FX, relating what sort of tools and equipment I use around just the standard charts. Another question from Crypto A to Z. It's the old favourite indicators table, and this is all about how you put together indicators, because I get asked quite a bit, technical analysis, what indicators should I use, what's my favourite indicators, what should I put together. So I put together this table, and I've broken it down into 5 columns by different indicator type. See the headings there: trend, momentum, volume, volatility, sentiment. And there's a rule in technical analysis called collinearity. You don't want to be using all the same indicators based off the same information, because it's all essentially giving you the same answer. So that's why we've got these 5 columns, because I try and pick from each of them. You don't have to put all 5 of them together. You could have maybe trend and volume or sentiment and momentum, completely up to you. But just don't overload your charts with everything, say, from the trend column. And just for the record, their CP means closing price, because I get asked that as well. So it's up to you what you use, but like I said, you might take the MACD from the trend and put that together with the stochastics and momentum. Remember, momentum, the stochastics is more of a volatility type indicator compared to MACD, which is a closing price. So you're getting a different angle, and if both of them are telling you to buy, then it's going to give you more confidence in the decision making process. So put that table together as a starter's guide to how to think about, you know, coming up with the technical analysis tools for your trading strategy. So that's the pre-sent questions. We've whizzed through them. Any other live questions right now that you'd like to ask? I can see something from Peter Thompson saying, am I located in the UK? Yes, I am. Yep. South of London, in a city called Canterbury. That's where I live and work, outside the big smoke of London. Worked there for many years. It's nice, a bit quieter down in the countryside. So let's have a few minutes to think of some questions, and then we can maybe crack into those live ones. In the meantime, like I said, reminder, don't forget to look out for the copy trading video next week. I'm excited that's getting started. Benzinga as well, like I mentioned just a bit ago, we've got that 25% off the subscription offer there, and you can sometimes see me on their television channel as well on a Thursday afternoon. I've been doing that quite regularly too. What else could we talk about in terms of what I've been up to? Been trading heavily on the options side and the CFD side. A lot of new strategies that I've been building and developing. I've been testing out MT5 and a product called EA Builder, which can automate the MT5 trading. So the video's coming out on that soon as well. So have we any questions out there? No, it doesn't look like we've got any further questions. So this could be a very, very fast session. Hopefully I answered those questions that were sent in already. Do we have anything else to ask? Talk about time of day when day trading, from Peter Thompson. Day trading, FX, anywhere from 6:30 till 10 o'clock, that's the UK time. Works very nicely. Then you've got the US coming in. Remember, the UK is about 40% of the FX market, so that's why it's so popular. Then US between 1 o'clock and 3 o'clock, you've got a lot of economic news out in those times, which can add volatility to the price. Day trading, I like US stocks over UK stocks or European stocks. Got more volatility, better for technical analysis, I find. So UK wise, that's 2:30 PM all the way through to 9, but the busy part of the day is the first hour and a half. That's where most of the volume of the market over there trades, and then you have that last hour of the day as well, which can also bring in some decent activity as well. Commodities, most the ones I trade are US based, but for example crude oil can be moving around sort of from the UK time all the way through to the evening really, so you can be day trading that all day long. Same with gold really, and then cryptocurrencies, that's 24/7 moving all over the place. But I've noticed that for cryptocurrency some of the big moves are in the, I'd call it the Asian time zone. If you're sitting there watching your screens, that's why I've automated out pretty much all of my cryptocurrency trading, so I don't really watch the screens because I haven't got the speed or time to take all that on board, and I'd like to do a bit of sleeping at night, so I let the computers run that one. So I think that covers probably most of the market time zones for day trading. Please explain your trading and mentoring services to new traders. That's from Crypto A to Z. Well, if you want to, I take on board probably 10 people a year and train them up. It's a year program, individually tailored to the person and what they want to achieve, building a trading plan, constantly monitoring what they're up to, trying to teach you how it really works in the world of trading and what you need to do to get there. And it's down to that person whether they just want to do it as a hobby or as a full-time trader. It's a package that, like I said, runs for a year, and I don't take too many people on because of the time that it takes. 10 people, it's you do one session a week, 1 hour for that year, so it eats up a lot of time, and I've got to do a lot of trading and YouTubing and all the other stuff that I get on with. So that's pretty much it, and if you're interested, just drop me an email. Email is under all those descriptions on the YouTube channel. Thomas, afternoon. Do you think Barclays stock will recover? Probably not that quickly. I think the banking sector has got a lot of work to do, and it's a changing sector as well. You've got cryptocurrency market behind it. You even got digital, government currencies coming in as well, which will change the face of banking, new payment systems, that sort of thing. So they've really got to evolve these banks. They're big. I would describe them as an oil tanker in the Thames, and trying to turn them. They're old school, and they need to up their game. Barclays at the moment, just pull back that chart again. Let's see if we can find that chart. Where was it? Barclays there. It's bottoming, and like I say, it's got to move up a long way to get back to where it was. It wasn't doing too badly in 23. If we look, they actually had a decent autumn winter up to mid-February, and then it's collapsed on down to losing a third of its value. I'd say probably if it does start to recover up to the 160, 170 range in here, that would be a good recovery for the most part of this year. But I still think there's more problems in the banking industry to come. Any AI stock to look at? Well, the big winners this year have been the big stocks. Your Googles, Microsofts, those type of people. But I like C3 AI over in the States because it's one of the purest AI stocks you can play, and they're I suppose their business model is quite well spread over a lot of key sectors, from defence, security, infrastructure, medical, the whole lot there. energy. So that could be an interesting one to watch. It went off to a really good start. I was trading it at the start of the year, and it's sort of calmed down a bit now, but I still think it's got potential. But yeah, I'd look at the big ones, the big boys, the obvious ones. Even I suppose you even think like Nvidia is sort of an AI stock, because the more of this AI stuff, all its technology and that goes into the computers, and the more demand there, they're building stuff in that space as well. So think of the big boys, but there's not many smaller stocks out there specifically focused on AI. So yeah, I would go for something like that, or even that ETF that we saw earlier could be an exposure window in for you on that sector. Clint Wilkinson, I heard you mention in one of your videos about turtle trading. Is it still a good system to use today? Now, the turtles, if you've ever watched the film Trading Places, that's Eddie Murphy. That film is based on the turtles. Not too many people have heard of these turtles, but it was one of the biggest success stories of turning retail traders into millionaire traders. And this guy on Wall Street, he was a big cheese in the day, and he just plucked these guys off, taught them a method, and they all did really well as long as they followed the rule set. And that was his goal, was to prove that he could teach people how to trade and be successful traders. Are they still relevant today? Now, I've had a look at building some of those, and I would say with technology and the way the markets have moved, I'd probably say no. You'd have to change the variables quite heavily, I think, now to get them to work. So I've got a few books on the subject, and I've looked into it a lot, and you can learn a lot. I still say you can learn a lot about risk and trade management from them and how they think about building strategies, but I think the actual strategies, I think unless you've got really deep pockets, it's going to be hard work. So I wouldn't go there. Do we have any other questions? Give you a few more seconds. No? Well, I think we'll call that it for the evening. I want to go home and get something to eat. So thank you for joining me. Just pull up on the screen the next session, just to remind you, 26th April, 7:30. Also, don't forget to join in on the Telegram group as well, where you can discuss and ask questions and get more involved. A lot of talk goes on in there, ideas. You can talk to the other traders around. It would be nice to see you on there. Just a couple more questions coming in. We can certainly tick them off. Daryl says, do I still use the Donchian channel offset? Yes, I do. And Peter Thompson, recommendation for automation. That's a good question. Have a look at one of the videos I did on building an FX robot in 5 easy steps, because in there's something called EA Builder that works on MT5 and MT4. That's a nice little tool there. There's a few cryptocurrency ones as well, but I don't really back them anymore. Build my own stuff. So it depends on what markets you're looking at trading, Peter. But I suppose the easiest way into automation is the MT4, MT5 world. Outside that, I normally end up building my own sort of stuff. 3 Commas, there's another one. Check them out for crypto if you're into that sort of thing, because that links into TradingView as well, and you can automate your strategies out that way too. Do we have anything else? Last chance. I feel like an auctioneer at the moment. Going, gone. I think then we'll round that up for the day. Just gone 8 o'clock here. So thanks for joining me. Oh, one last, just sneaked in before the hammer went down. CR, what's your opinion on RIOT and Mara as stocks to trade volatility in Bitcoin? They're highly, my opinion is, well, there's two thoughts there. One is that they're highly correlated to the price of Bitcoin anyway. So you're basically trading Bitcoin as themselves. But I suppose the other thing is, if you don't want to trade Bitcoin itself, you're worried about, the exchange going pop, or getting your money out, that sort of thing. Why not trade the stocks? Go long or short the stocks, use options on the stocks. RIOT, Mara, get your exposure to cryptocurrency that way, because I said they are so correlated. So if you're bullish cryptocurrency, Bitcoin, then buy RIOT and Mara. If you're not, go short them. It's sometimes easier to find the stocks that are related to those type of markets. The same with like energy or oil, some precious metals, that type of thing. Find a stock that's correlated and trade that. Often will be cheaper and easier to do. So that's my opinion there. CR on those type of crypto stocks. So I think that really is it for tonight. Can't see any other questions in, so once again thanks for joining me, and I hope to see you sort of this time next month. So good luck with the trading over April. Hopefully see you on that Telegram group, and you can share your success stories with all the other traders as well. So thanks for coming along, and I will speak to you all soon. Good night.